For all of you with me, I want to know, do you trade in any way, shape, or form in any market now or at any point in time in your entire life, demo or live? If you have, hit the Y button and enter. If you have not, hit the N button and enter. If you can do that, it gives me an idea of the pace that I need to keep, and I am seeing that easily 98% of you have traded in the past. So, ladies and gentlemen, buckle up. Get your pen and piece of paper ready. Let's get going. For everybody here, what we're going to do right now is we're going to discuss potential. But what I'm going to do is I'm going to take you through the entire life cycle. I'm going to simulate action right now. I'm going to show you what it means to be an MTI client, and you're going to get an idea of what the results can be for you. Now, for everybody in here, this reaffirms a belief. And guys, the belief that I want to instill in each and every one of you today is that all of you can do this. Now, I talk about these other presenters from, the Trading Post or the Trading Pub, and guys, they are very, very smart people. I am very proud to say I am a successful trader who repeatedly failed. I have been trading, now let me share some information. I'm 35 years old. I've been trading for 20 years. I started trading when I was 15 years old. I grew up in a family of financial planners. Again, guys, for everybody here, my childhood was probably a little bit unique. By the time I was 25, I had already been trading for a decade and experienced a decade worth of losses. Now, for everybody here, understand something. It wasn't like, oh, you're only 25, big deal. Ladies and gentlemen, when I graduated from high school, I didn't go right away to college. I had a bunch of, think about this, family members, vice presidents of firms. I didn't go away to college. I knew what I wanted to do. I immediately started working with Dean Witter Reynolds right out of high school before going away to any college back in the 90s before they merged with Morgan Stanley. I graduated from high school at 17 years old, ladies and gentlemen. I had to wait until I was 18 to even start working with the firm. For all of you with me, I'm only 35 years old, but you can read it on your screen. I've got some miles on me already. For everybody with me, I want you to understand something. It was this organization that gave me the ability to stop failing as a trader and start succeeding. Now, many of you guys heard this beginning part, but what you didn't hear is the individual that founded this organization. Now, some of you are going to be very familiar with this name. This is Mr. Jared Martinez. Now, he's the founder and CEO of Market Traders Institute. He is a 20-year veteran of foreign currency teaching, mentoring, and trading. He's changed the lives of hundreds of thousands of people. He is an esteemed author. This is a gentleman that over 2 decades has written over 20 books. His 2 top sellers are the 10 Essentials of Forex Trading and the Forex Mindset, and he is a contributor to many major financial websites and TV shows. For everybody here, I kind of briefly touched on it previous to this, but guys, what Market Traders Institute does is they keep you focused, and I mean laser precision focused. They do it through really pointing out the obvious that most traders just forget to focus on. Can we all agree, when asking the question, who moves the market, either individual traders or bank traders or professionals is what we'll call them, can we all agree that professional traders are the ones that move the market, especially in the currency market, right? In the currency market, to give you guys an idea, I know many of you come from other markets, this market does in excess of $4 trillion a day in volume. Now, part of the reason that the market does that much in volume is that this market trades, and this is a great point, 24 hours a day, 5 days a week. Now, you're getting it on the only day a week that it's actually closed. The market opens tomorrow. It trades all day tomorrow, 24/7, Monday, Tuesday, Wednesday, Thursday, until Friday in the afternoon. It closes again. Now, for everybody here, for a long time, retail traders had to just understand, okay, well, it's pros that move the market, but they never knew to what degree. Well, guys, now it's fact. We know that about 18% of all market volume comes from retail traders. Now, the reason that this is so important is because this gives us a fact-based number so all of us can understand. Listen, the reality is if you want to trade successfully, getting educated by retail traders, getting educated by people that say, hey, look, maybe I wasn't a great trader in the past. I cracked the code. I learned how to do it. I have no professional trading experience, but I cracked the code. I learned how to trade. Let me teach you how to trade. Guys, what you got to understand is that this is a recipe for disaster, because whether it's currency trading or any market, trading in any market, professionals are the ones that move the market. So, ladies and gentlemen, can we agree that if you had the experience of a professional, the insight of a professional, that it would give you a competitive advantage when trading? Can we all agree? Absolutely, right? Now, for everybody with me in the presentation, let me show you the thing that a lot of you in this presentation will know. There are 418 of you with me right now. Michael types this in. Sean, I love MTI. I finally am starting to make money just from your webinars. Can't wait to have enough money to take the full course. Michael, I appreciate it, my man. For everybody with me in the presentation, I want you to understand something here. Most of you in this presentation, big part of the reason they convinced me to do this, I am going to get to show you guys advanced trading technique today because I think we got a smart group here. How many of you in this presentation have ever read a book about trading in any market, watched a web presentation, and I know the answer to this one, or taken advantage of education to learn how to trade in any market? See, this is the reason that I don't mind devoting some time on a Saturday. For all of you with me in the presentation, many of you walk around with this feeling of guilt each and every day, each and every time you trade. And the reason is simple, and you admit it to me if you want to or not. I went through it and I've helped tens of thousands of traders. I know what you're going through. You walk around with a feeling of guilt. I spent all this money. I invested all this time. I made this sacrifice. I don't feel, I may be getting something, but I don't feel like I'm getting everything out of what I have invested into this market, whatever the market is, whatever the amount was that you invested. Now, how many of you, whether it's time or money, can agree you don't feel like you've gotten out what you have put in? Even if you're making money, you still may not have gotten out what you put in. Now, for everybody with me, I am here initially, just in the beginning, to alleviate some of this guilt, right? The reason that you're not seeing success isn't because you're not trying hard enough. Ladies and gentlemen, professional traders have other advantages. Now walk with me through this, and I am getting very low participation for 429 people. You hit the letter Y and enter. I promise you'll like it, and it helps give me confidence that the information that I'm sharing with you is hitting home. So for everybody here, let's try this. I'll give you, yes, and BH, I see it. For everybody here, Nitin, Ruth, Harleen, Balak, Chris, David, BH, Jeffrey, Bajan, Wilson, Tony, May, Corbin, for all of you typing them in. I can see you guys typing them in. I appreciate you typing them in. All right. Can we all agree? Here's your first chance. Can we all agree psychology plays a major role in the trading process? Would we all agree? Y for yes. I not only love this group, I am now in love with this group. You guys are on fire. Thank you. So guys, here we go. Professional traders have teams of expert analysts that work with them. Now, this might not seem like a big deal to you, but can we all agree also that human beings are creatures of habit, right? I don't think I'm stating anything crazy. Think about the process that you go through. I don't care what market you're trading in. Think about the process that you go through when you're looking over trades. Bad trade. Nope, that's not one I want. Bad trade. Nope, that's not one I want. Bad trade. Nope, that's not one I want. Now, can we all agree? Oftentimes you'll look at 10, 20, you could look at 50 bad trades before you find a good one. Can we all agree to that? Now, whether you realize it or not, to your subconscious, there is a pattern that is being developed. Now, for all of you with me, and I know this happens to, I've got 441 with me right now. I know 300 of you have this problem. For all of you with me, it doesn't matter how good the trade setup looks. You cannot erase 100% of that, oh my God, is this the right thing to do feeling from your stomach? The reason is because your brain has just seen 10, 15, 20 no's. When it sees a yes, we are creatures things right back up on the screen and get the exact same results and expect to feel differently but never really do. How many of the 445 with me can agree to the feelings that I'm describing to you? All right, so we all know the bad side of it, right? Here's the good side. Professional traders, believe it or not, and people don't realize this, and guys, I don't know if you saw it on my little bio thing there, but I was the vice president of one of the largest foreign currency brokerage firms in the United States. Now, being a broker in the currency market and being a vice president is a lot different than being a vice president in like the equity market. I had a lot of folks, you know, grew up in a family of financial planners. When I started working with Dean Witter Reynolds before they merged with Morgan Stanley out of high school, I walked out into a hallway and there were probably 40 offices of vice presidents. Somebody had to explain to me how a business could have 40 vice presidents. I thought there were only a few of them. Well, in the brokerage world, in the equity world, everybody's a vice president, right? In the currency world, there were 3 vice presidents. So for everybody with me in the presentation, I want you to understand I had access to everything. That includes traders, the trading room, everything. So for everybody with me, I want you to understand something. When I give you examples of things, understand that they come from positions of, hey, I've done it, I've been there, I've seen it, I've worked with it. Professional traders, ladies and gentlemen, they don't find their own, listen to this, they don't find their own trades. They don't find their own trades. See, what they do is they have a team of expert analysts, and what they do, those analysts, is they're the ones that look over all of the trade setups, right? They're the ones that look everything over and go through that process. And when they see a good trading strategy, they just say, or a good trade setup, they just send it along to the professional trader. They say, hey, okay, here's a good trading opportunity. Make the best of it. Now, for everybody here, can you see how that pro trader who knows that that trade setup just went through the eyes of a professional analyst and doesn't have any preconceived notions, doesn't have any patterns, doesn't have any habits, can you see how the very first thing that they do when they look at that trade or that chart is they look at it from a position of how can I make money, as opposed to why do I have this feeling of doubt that I just can't seem to shake? Now, psychologically, do you guys at least start to see a difference there? When you combine this with the fact that they get personalized account management and proven trading strategies, you can really start to see the advantage. Now, personalized account management, and again, for all of you with me, you're investing maybe 5 more minutes and I'm getting into some good stuff. But it's important that all of you understand this. Personal account management, these are folks that are literally like professional coaches for professional athletes. What they're doing is they're looking over your shoulder. They're saying, okay, when you trade, in this instance, in these time frames, in these currency pairs, with these strategies, you do very, very well. However, when you trade with these strategies in these currency pairs in these times, you do very, very poorly. Now, for everybody with me in the presentation, what these folks do is they not only direct you, but they're constantly optimizing you. Another one that I want to talk about is proprietary trading systems. Now, guys, I'm going to introduce you to one of MTI's proven trading strategies today. Right, just one. What I'm going to do is I'm going to show you the entirety of it, the way the whole thing works. Then I'm going to show you a system. Now, many times in the retail world, systems get bad names, and they deserve the bad name that they get. Most of them are terrible, right? Most of them are terrible. And Rick, I appreciate your patience, my man. I'm getting to the good part. For everybody here, markets don't move in a straight line, right? Markets are going to wave. Markets will wave like this. Now, what a good trader wants to do is we want to get in low, we want to get out high, and we want to make all of the money in the middle. Can we all agree to that? Good. Now, what we try to do as human beings is develop proven trading strategies or trading strategies that give us the ability to get in right here and out right here and make all of the money in between. Believe it or not, strategies like this, they exist. Professional traders use them all the time. I'm going to introduce you to one today. Believe it or not, professional traders and trading firms make a whole bunch of money using proprietary trading systems. But guys, they don't do it like retail traders do it. What they do, and TJ types this in, and I appreciate what TJ types in, says, I want to make all the money, and I appreciate that. But what I want you guys to understand is this. What professional traders do is after they develop a proven trading strategy, they develop a proprietary trading system. Now, systems require indicators, MACDs, moving averages, stochastic RSIs, Williams percent Rs. There's thousands of these things, right? Almost all of them have one fatal flaw. Now, most of you guys here are smart traders. You guys have heard of it. How many of you have heard of the lag issue? Lag with yeah, there you go. Wen typed it in. For everybody here, let me explain what lag is, right? Let me explain what lag is. Because indicators, all these things, all these indicators, because these indicators require the market to actually do something before it can do something about it. I'll give you an example. Right here, the market was going down. So the indicator thinks, okay, we're going down, we're going down, we're going down. Now, the indicator needs the market to actually show it that it's going to go up, right, before the indicator will actually take action to get the trader in the trade. Does that make sense to everybody? Now, once it sees that the market's making the move, the indicator gets you in. The exact same thing happens on the way out. The indicator thinks the market's going up. Well, look, the market has to actually U-turn and start going back down before the indicator realizes, oh, wait a minute, it really is going down, and the indicator gets you out. For all of you with me in the presentation, what you're getting here is a visual example of lag. It got you in a little late. It got you out a little late. However, for everybody with me in the presentation, can we all agree that it did grab you the little fat part in the middle of the trade? Everybody understand this? And there's nothing wrong with grabbing the fat part, right? I like that. What professional firms do is they give their human beings, and this is the reason that humans will never be wiped out of the market. For everybody with me, understand something, all right? This is the reason that human beings will never be worked out of the market. Proven trading strategies executed by human beings are what you get you in here and out here. But can we all agree, if you're a pro trader, you like the idea of having a proprietary trading system that's grabbing you the fat part to kind of consistently make you money as you're out there trying to hit those home runs? Now, for everybody with me in the presentation, that is exactly what professional firms do. Now, they don't just develop these things and leave them alone. They are constantly maintaining them as well. And all of this is part of what Market Traders Institute provides. All right, so let's get into some good stuff. Guys, everything that you have here on your screen is all what MTI gives you as a client. Let me show you how it works. One of the things that Market Traders wants to show you today, and I'm going to show you guys this. For everybody with me right now, Next Step Financial Holdings and Market Traders Institute are very confident in their ability to teach you to trade. On your screen, Next Step Financial Holdings is willing to put up $500 to prove it. Over 120 days, they'll cover up to $500 worth of losses. So for everybody with me in the presentation, show you how this works. Guys, in the currency market, there are two words that you need to understand. I went over these briefly. Number one, what is a lot? Number two, what is a pip? First, what is a lot? Lots are the increments that we trade as a foreign currency trader. Lots require a roughly $2,000 investment and have control of $100,000 worth of a currency. Now, for everybody that was with me in the previous presentation, I pointed out that on a $2,000 trade, you could have as much as $500 worth of risk, and you're trying to get about $2,500 to $5,000 worth of reward. Now, for everybody with me in the presentation, some of you are looking at this going, okay, $500, that's supposed to be $100 worth of risk. I'm completely okay with that. Others are looking at this saying, well, $500 worth of risk, that's a bit steep. I really like the reward option, right? But I don't know if I could comfortably risk 500. Maybe it's something for down the road. For everybody with me in the presentation, let me show you why Market Traders Institute and the currency market are perfect for all of you. Some of you are looking at $500 and saying too much. Well, you can also invest $200 per trade. Now, all of a sudden, everything I'm about to show you becomes an option for all of you. You're no longer risking $500, you're only risking $50. Now, can we all agree that $50 in risk is completely doable? Can we all agree to that? Very good. So financially, we're liking what we hear. Can we all agree that it doesn't matter if the risk is small, the reward must still be relevant? Because I'm not going to waste my time risking $50 to make $50. No offense, but if it takes me a week to do that, I got better things to do, right? So ladies and gentlemen, what if on $50 worth of risk, you could generate $250 to $500 worth of reward? Can we agree that on a $50 risk, $250 to $500 worth of reward, man, that's still a good enough reward. I like that risk. I'm okay with those numbers, especially as a starting place. Very good. And guys, if you're here and you're saying, man, I'm okay with that $500 thing, that's great. Ladies and gentlemen, the reason I say that's great is because you're trying to capture something called a pip. Now, all movement in this market is counted in pips. And in essence, a pip is 1/100th of a cent. And again, you know, and I'm going to say this, Michael is somebody that is typing in a comment right now. Michael is somebody that joins me in a lot of these presentations. Michael is saving up his money to try and create enough money to, you know, afford to purchase the education that I'm going to introduce you to today. Michael types this in. He says, that's what I started with. Michael, you started with $200, is that right? So that's what I started with. Now I'm up to about $3,000, but he did that in a week. Now, for everybody with me in the presentation, let me show you how this happens. What he did is he started out, and he was just trying to trade individual pips, right? Individual pips. An individual pip, it will always be the final two digits on the far right-hand side. Real quick, Michael, lots of folks in here are going, you know, fantastic, awesome, Michael. And Michael, let me know. And guys, Rick says paper trading works. Paper trading is great, but I don't think Michael's talking about paper trading. I think he's saying, yeah, I think he's saying he took like $200 and turned it into $3,000 of real cash. For everybody with me here, the way that it works, yeah, Michael typed in cash. The way that it works is this. The last two digits on the right-hand side are where your pips are. If the market goes up 1 pip, you make money. Now, the nice thing about trading in the currency market, somebody made mention of this earlier, you can also short sell, right? Oh, Aussie yen, good job, Michael. You can also short sell. You can sell something at a higher price, buy it later on at a lower price, and make money as well. So if the market were to go down from 96.89 down to 96.88, you can make money in that instance as well. Now, for everybody here, in the currency market, and this is by far the best part, if you're willing to risk $500 on a roughly $2,000 trade to make about $5,000, then you can trade in roughly $2,000 increments, and each pip is worth $10 per pip. If you decide you're not comfortable with that, each pip can be worth $1 per pip. You'll trade in $200 increments. You'll risk $50 each time. You'll give yourself a maximum or an average high of about $500 worth of potential profit. For everybody with me, when Michael's talking about being able to take a $200 account and turn it into a $3,000 account, can we all see how risking $50 and making $500 can turn a $200 account into a $3,000 account? Nice, simple math. Omar types that in. I would agree. For everybody with me, understand something. What I'm about to show you today is all based on things that many of you already understand. Now, I have a lot of hobbies. One of my hobbies is I love automobiles, classic cars. I am a collector. For everybody with me in the presentation, I want you to understand something. I'm going to introduce you to a bunch of different pieces of technical analysis. Now, individually, I would never trade on these pieces of technical analysis by themselves. However, when put together, they are phenomenal. For everybody with me, do you guys pay attention to market direction, yes or no? Yes or no? 456, you guys pay attention to market direction. If you do, you are right. If you do not, I will tell you, I don't pull punches. That's why I have a tough time in those Trading Pub presentations. I don't want to be rude to any of the other presenters, but man, the stuff that they do looks so darn hard. Guys, I will tell you something. If you're not paying attention to market direction, you are making a mistake. All right, you are making a mistake. A market that's making higher highs and higher lows is a market that is in an uptrend. For everybody with me in the presentation, do we agree this market is making higher highs and higher lows? It's in an uptrend. Yep, smart group. So for everybody here, let's make it nice and simple. Ladies and gentlemen, if you're in an uptrend, do you B for buy or S for sell? What do you think? Bingo. You buy. The trend is your friend. Trading in the direction of the trend is a higher probability trade. Guys, this is just a simple way for retail traders to learn. Professional traders move the market. If they're moving the market to the north, don't attempt to predict when the market's going to U-turn. They're the only one that can decide that. You continue to trade in the direction of the trend until you get reason to know that market direction has changed. Now, I'll show you all of this. How many of you use trend lines? Anybody here use trend lines when you trade? Very good. You see it on the screen, guys. Trend lines are a path of least resistance to consistent profitability as a trader. For everybody with me in the presentation, I know most of you are experienced traders, so you're looking at my fake chart here, probably thinking the exact same thing you have been for the last hour in that previous presentation. Anybody can make it look easy on a fake chart. I'm going to take you into the live market, but can we all agree, as long as your technical analysis is plotted properly, can we all agree the pattern is pretty clear? The market hit and bounced, 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 and very clearly we can all see that the market has a good chance of once again potentially bouncing right here. Do we all agree to everything that I'm pointing out? And let's just take a quick head count. If you understand 95% of what I've gone over so far in the question section, please type in the letter Y. Very good. Now, guys, just like what I told you before, and I appreciate this. I can't see it. It flew by so quickly, but somebody typed in the word, maybe it could bounce here, and I agree with that. Can we all agree that the market can do whatever the heck it wants? It could fall all the way down to 100 if it wanted to. It could fall off the map if it wanted to, right? I am not telling you that by itself you strap on a little knowledge of trend lines and go trade. What I am telling you is that just like a classic automobile, there is value in the engine. There is value in the transmission. There is value in the body. They're individual pieces. They have value. It's only when you put the pieces together that you truly unlock the value. Now, for everybody in here, what we call that in the trading world is a trading strategy. Now, what retail traders have been doing is running around forever trying to figure out what is the right trading strategy for me. How many of you in this presentation have been running around trying to figure out, because somebody told you, figure out how you should trade, find the right trading strategy for you? How many of you are in here running around looking for the right trading strategy for you? Okay? All of you in here that are running around trying to find the right trading strategy for you. Let me go ahead and create some clarity. Can we all agree that the right trading strategy for you is the one that makes you money? I bet we could all agree to that one, can't we? Man, the one that consistently makes me money, that's the right one for me. I don't care how I get there. Ladies and gentlemen, let me explain something to you. In a $4 trillion a day market, what you really want to look for, you want to look for the trading strategy that makes you money. That's the right one for you. For all of you with me, key components to these strategies are also things like this, Leonardo Fibonacci. Now, how many of you in this presentation use Fibonacci retracements and extensions? Know even a bit about Fibonacci? Lots of you do. Now, for those of you that don't, let me explain something to you. He was an Italian mathematician. This guy was all about numbers, ratios, sequences, but Troy don't know anything about him. Troy, he never traded a day in his life. Never once. He wasn't a trader. In fact, what ultimately ended up happening is when traders got a hold of his numerical sequence, they randomly just started applying it to charts, and guys, they found out consistencies. Now, for all of you with me, you can see that the market waves. The market goes up and comes down, and you guys are smart traders, so I don't need to go over the basic stuff with you. Simple question, if you knew the market was going to stall out here and go to here, could you make money with that information? Yes or no? If you knew the market was going to stall out here and move up to here, could you make money with that information? Yes or no? So this is the concept. This is the reason that professional traders pay attention to Fibonacci. It takes the guesswork out of it. Let me show you what it does. Fibonacci teaches us that after the market moves in one direction, when it retraces, and I think all of you guys know what a retracement is, when the market retraces, it's going to come back down, and when it does, it's going to retrace to these Fibonacci retracement levels. Now, these Fibonacci retracement levels on your screen, they are called the 386, 50, 618, 786. For everybody with me, Fibonacci just simply says that when the market comes down, it's going to hit this line and bounce. It's going to come down, it's going to hit this line, and I do it kind of crooked, but bounce. That's all Fibonacci teaches us. Now, the awesome thing is Fibonacci not only teaches us where the market will have a high likelihood of hitting and bouncing like it did here and hitting and bouncing like it did here. The other thing that it is going to do, and Corbin, I want you to remember that because I'm going to give you the answer. The other thing that it's going to do is it's going to tell you extensions. After it bounces, how high up should the market go? This is the reason people love Fibonacci. If this thing really worked, can we all agree you would love Fibonacci as well? If it really worked, right? Absolutely, got to love the concept. Now, Corbin asks a great question. Corbin says, the only issue that I have is, how do I know if it's going to bounce on a 382, 50, 618, 786, 86? And guys, that is the easiest. Think about this. That's the easiest question to answer. Watch this. I'm going to show you. For everybody with me in the presentation, before I do, can we all, just one more thing, can we all agree that based on the fact that the market is hitting a 50 Fibonacci retracement right now, and just simply based on the facts that Fibonacci teaches us where the market has a really good chance to bounce, can we all agree if the market were to bounce, it would absolutely need to bounce right now? Can we all agree to that? Right? If you even remotely understand even the most general thing about the concept, this is where the market would have the highest likelihood to bounce. If it did, we would all want to be buyers, right? We want to buy now, ride the bounce up, take a little profit, and get our heck out, right? So for everybody with me, one last thing I want to talk to you about, and then I'm going to answer all of the questions, all of the confusion. Last one is support and resistance. Let's talk about something all of you are familiar with. For everybody with me in the presentation, do you guys remember learning support and resistance? Yes or no? Now remember, I learned support and resistance. Believe it was my uncle that taught me support and resistance. I started learning support and resistance right around the time I was 12. I wasn't trading yet. I think he thought it would be fun to try and confuse a 12-year-old. For everybody with me in the presentation, this is the way he explained it to me. All right, take a look. For all of you with me in the presentation, this is where professional traders, they're the ones that move the market. All right, they're the ones that move the market. This is where professional traders see a product, something, whatever it might be. And Wilson types this in. However, the lag from support and resistance makes predicting it difficult. And actually, Wilson, I'm going to show you how to fix that right now. Actually, I guess let's ask this. 458 of you with me. How many of you are going to admit that you're frustrated by support and resistance? There are all these lines all over your screen. You don't know which one the market's going to pay attention to. Half the time the market blows through them. You don't know what's going to happen. You've gone through your life cycle. You're a little frustrated with support and resistance. Let me answer these questions for you, guys. This is where professional traders think the value is low. Now, when they start getting out of a trade, it's not because it's too high. They get out of the value or get out of a trade when the value of something is what it should be, right? They get out of the trade when they think the value is what it should be. So when something hits its actual value, they get out. Now, it's the professional traders that are buying that push the price up. It's the professional traders that are selling that push the price down. When it's cheap again, the pro traders say, hey, it's cheap again. It's time to buy it. Now, it's these really laws of supply and demand, right? These laws of supply and demand that are really creating these levels of resistance. At this, there's some demand at this price. At this price, demand wanes. So when it hits this price, it ultimately ends up falling back down. For everybody with me in the presentation, take a look right here. This is called resistance, all right? Resistance. For all of you with me in the presentation, resistance is kind of like a ceiling, all right? A ceiling. What it does is it's where the market hits its price, falls. Now, at some point in time, the market will break through its old ceiling. Now, when it does, it doesn't normally fall all the way back down to zero. And guys, this is what you want to look for. What you want to look for is once the market falls back down to the previous ceiling, that's when it becomes the new floor. And here's where the greatest trading opportunity lies. Now, for everybody with me, my point is simple. You do not want to spend a lot of time trying to trade the resistance. The best trade is after it breaks through the bounce on support. This is when it makes the biggest bounce. This is when the greatest potential profit is. Now, for everybody with me in this presentation, did you guys learn support and resistance in a somewhat similar way? If you did, type in the letter Y for yes. Very good. Now, for all of you with me in the presentation, I want you to see something here. You got a little support and resistance here on your screen, but the problem is, and this is where people have a tough time, the problem is people attempt to use support and resistance to figure out when to get in and out of trades. Ironically, this is the same problem with all of the instances that I just showed you. The problem is that what traders do is they use all of the individual things that I just showed you to attempt to figure out when to get in and out of trades. They do not put the right pieces of technical analysis together to create something called confluence. Now, I have a smart group with me today, so I'm going to assume how many of the 458 people with me know what confluence is. If you do, type in the letter Y for yes. Bingo. For everybody with me in the presentation typing in your yeses, you're going to see it in a second. For those of you typing in your no's, let me tell you what confluence is, and this is what all traders are looking for. Nothing used to frustrate me more than getting myself involved in trades where half of it, whether it's technical or fundamental analysis, to sell. Now, can we agree those are the types of trades that we want to find? Confluence, right? So there's no, well, this says buy, but this says sell. What do I do, right? Guys, let me show you what confluence looks like. Now, again, I know you guys aren't going to give me complete credit because you guys are a smart group of traders, and you know that anybody can make this up in a fake chart. However, I'm going to take you into the live market, so give me a chance to prove it to you. For everybody here, can we all agree this market is in an uptrend making higher highs and higher lows, therefore we should buy? In addition, we're potentially bouncing off of a trend line. That also means that we should buy. In addition, we're potentially bouncing off of a 5-0 Fibonacci retracement and a support and resistance level. All four of these mean buy. Now, can we all agree that by themselves, none of these are strong enough to listen to? However, when I put all four of these up on my screen, not only do I have four very clear this is the thing, non-lagging technical indicators all telling me to buy at the exact same time. But ladies and gentlemen, can we all agree to this? And this is where the 457 of you that stuck with me to this point through the presentation get the payoff. Can we all agree that what I am showing you is maybe starting to turn a light bulb on for you folks in the presentation? Interesting, right? Now watch when the light gets brighter. Can we all agree that knowing where the market is going is important, but knowing when to get in and when to get out is even more important? Can we all agree to that? Fantastic. So ladies and gentlemen, let me show you why you should love this. What Market Traders, what I'm introducing you to is a strategy that I've been using for a decade. Okay, I know it works. I use it on a daily basis. It is a huge part of my trading success. For everybody with me, the reason that I can emotionally give For everybody with me in the presentation, let me show you how a professional trader does it. They get themselves involved in trading setups via the strategy that give them the ability to enter into trades that must, now listen to this, because this is where you get that old saying, cut your losses short and let your profits run. They develop strategies that get them involved in trade setups that must either immediately move in their direction for a number of reasons, or must immediately stop them out of a trade for a number of reasons. Now, for everybody with me in the presentation, in simple English, what I'm telling you, can we all agree that the red circle here on my screen, if the market were to come down and touch the very bottom of my red circle, it means that it would have broken through my trend line, through my support and resistance level, through my 5-0 Fibonacci retracement, and because of all of that, by definition, be making lower highs, lower lows, be in the beginning stages of a downtrend. Can we all agree that if the market were to close, if candlesticks closed right there at my red line, I wouldn't want to be in this trade anymore? Because all of the reasons that I got myself in all failed me. Can we all agree to that? Now, for everybody here, this is my stop loss. My limit, well, my limit is way beyond what you can see on my screen. Now, I know, guys, I know fake chart. I'm going to take you into live charts here in just a second. But in concept, how many of you with me in this presentation want to figure out how not only attendees here, $200 into $3,000, but how banks, brokers, lending institutions, how they have the ability to set up trades where they can take $50 in risk and make $500 in reward, or $500 in risk and $5,000 worth of reward? Who wants to see it in a real chart in the live market? Okay. All right. I appreciate you guys spending a Saturday with me, devoting some time. I'm going to give you exactly what you're looking for. I'm going to pull it up here. Everybody's screen should be staring at my charts. Can everybody see my charts on your screen? All right. A couple of things I want to point out. A number of you, I mean, I've got 450 people in here. There's going to be a ton of you that have already disagreed with a lot of the things that I've already said. I'm just going to tell you again, I'm not being rude. I'm just giving you the insight that I have from decades of doing this. Guys, professional traders, when you see a true professional trader's charts, they don't have indicators all over their charts. If you're wondering where my MACDs are, they're not there for a reason, okay? For everybody with me, what I'm going to do is I'm going to show you everything that's on my screen. You know what? I'm going to leave that, but I'm going to show you everything that's on my screen and how we, you know what the heck, I'm going to get rid of all of it, and how we came to these conclusions, just so you guys can clearly and easily see how this process works, so you guys can see whether or not it's something you want to try, all right? For everybody with me, what you have is the structure. We're going to pay attention to trend line, support and resistance, and Fibonacci. Now, guys, this is one of the techniques that MTI teaches you. I know for a fact in just this one technique, you can make a phenomenal living. For everybody with me in the presentation, what I'm going to do right now is I'm going to show you the way that it works. If you see it, you like it, take action. All right, nice and simple. Can we all agree? Wait for it. Here we go. My circle, right? My circle is circling the lowest point on my, Rob, I did not know that, lowest point on my chart with a Japanese candlestick. Can we all agree to that? Everybody agree? Lowest point on my chart with the Japanese candlestick has a yellow circle around it. Does everybody agree? I have 10 of you that agree, 450 with me. Bingo. Questions being asked, what are we looking at? Well, guys, we are looking at a currency pair. Now, what currency traders do is they trade one country's currency versus another country's currency. Now, this gives you a huge advantage, huge advantage. A big part of that advantage is that you get to look for unfair fights. Now, an unfair fight is kind of like what's going on your screen. We've got the US dollar versus the Canadian dollar. You've got one economy that's actually starting to do better and better, and another economy that can't do better until that first economy really starts doing better, because Canada gets most of their goods, or excuse me, they export most of their goods and services to the United States. So the only way we can fuel their economy by buying their goods and services is if our economy is doing well. Now, what that means is that we have to do well before Canada can do well. Does this make sense to everybody with me in the presentation? And for all of my Canadians in here going, I dislike the way that sounds, I apologize. I don't mean it as literal as it sounds, but it's the economic truth. For everybody with me in the presentation, what we have is a currency pair that since September of 2012 has been making high, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. And ladies and gentlemen, can we agree that we are in the beginning stages of a higher low? We're in an uptrend. Everybody agree? Very good. So guys, if we're in an uptrend, do we all agree that in an uptrend, if the trend is your friend, I would want to buy in this instance? Very good. So let me show you a couple other things. Let's pop some trend lines up here. Now, I'm going to draw them in an hour, hour and 15, guys. There's no way I would be able to teach each and every one of you how to do all of this stuff. So what I'm going to do is just prove to you that it works. Right? We'll go there first. I'm going to have a number of different types of trend lines on my screen here, guys. What I've got on your screen right now, this is basically, this is the equivalent of kind of like a GAN extension. I'm going to delete one of them. And now what you've got is your inner and outer trend line, your most relevant inner and outer trend line. For everybody with me in the presentation, the market went up, came down, hit my trend line and bounced, hit my trend line and bounced. And where we were yesterday, this is a daily time frame, where we were yesterday, the market had actually come down, and at its lowest point was right around here. Now, I'm going to leave this little black line here. The very next thing that I'm going to do is I'm going to plot some Fibonacci on your screen. Now, once you start seeing the fibs, the whole thing really starts coming together. Let me show you what I mean. So I'm going to zoom in, take you back in time, and you tell me what you see. Now, for everybody with me, this is that very same lowest low that I drew for you on your screen, right? What the market did is the market went up, came back down, and can we all see that when the market came down, it hit this 618 Fibonacci retracement right here? Right? 618 Fibonacci retracement. Now, for everybody with me in the presentation, from a 618, and this is the way that it works. If you're not familiar with Fibonacci, it really is this black and white. The rules state that when the market hits a 618 retracement, it should hit a 618 extension. So really simple, it means that the market will go up. When it comes down and bounces here, it should go up to this point. And guys, we can see that's exactly what the market did. It went from a 618 retracement to a 618 extension. Does everybody see this on your screen? If you do, 447 of you type in the letter Y for yes and enter. Kind of neat, right? How about the second time the market comes down to a 618 retracement and then should travel up to the 618 extension? Everybody see that that is exactly what the market did right here at this point. goes up. This is where it's supposed to go, to a 618 extension. That's where it's supposed to go. For everybody here, if you're wondering why, Sean, does the market repeatedly over and over and over, up, down, 618, 618 extension, up, down, 618, 618 extension, up, down, why? For everybody with me in the presentation, it's the equivalent of a foregone conclusion. It is the equivalent of a self-fulfilling prophecy. And Mappy types it in, and this is the truth. For everybody here, part of the reason that Market Traders Institute puts your emphasis on these specific indicators, these specific technical indicators, as long as you're plotting them the way that professional traders do, these specific indicators are the ones that are in the vast majority of robots and systems that professional traders use. In addition to this, these are also the core staple items for what professional traders use for their own trading. So what we're doing is we're keeping you focused on the things that genuinely move the market. And guys, because of this, what it does is it gives you the ability to really identify exactly where to get in, exactly where to get out. And Paul says, do you mean the 1.618 extension? And that's what it is, yes. Now, for everybody here, the interesting thing about this is when you properly identify fibs, but more important than that, properly plot them. Does everybody see how this was the up that the market made? Let's see if I make this a little bigger, we can use this. Market went up, came back down, and hit this 618 extension. Everybody see this on the large time frame. In fact, I'll show you an easy way to see it. Here's your up, then down to the 618, right? All right, for everybody with me in the presentation, now I'm going to delete this from your screen, and the reason that I want to show you this, these 618 retracements, when you understand what the market's paying attention to, happen over and over and over again in a variety of different time frames. For everybody here, do you see that the market made a 618 retracement here, went to a 618 extension here? These patterns take place repeatedly over and over and over again. Now, the reason I bring that up is because for everybody with me in the presentation, I want you to see this here. Now, guys, what we've got on your screen, the market has gone up, come down, hit a 618 retracement. We know that off of the 618, it's supposed to go to the 618 up here. Take a look at what the market did next. The market went up and came down. Now, I remember this move because this, actually, and my entry was right here. This was a trade that I took. Guess why I took the trade? Now, for everybody with me, this is what the trade setup looked like when I originally was taking it. Everybody see right here, once again, the market hit a 618 retracement. Right? Market went up, came back down, hit this 618. Now, watch what it does. Right? It hits the 618 retracement. When I do this, at this point in time, guys, I don't have this inner trend line yet. When I originally took this trade, it was just an individual single trend line. It looked just like that, right? So for everybody with me in the presentation, what I had to do was I had to figure out where I was going to set my stop, where I was going to set my limit, what I was going to do if I was going to take this trade. Because can we all agree, all of us are smart enough, if you show me how to find a pattern, I can find the pattern. Can we all agree, if I show you how to find a pattern, you can find the pattern? Right? Some of you in here are novices, but the vast majority of you in here are traders. As a trader, it's your job to find a pattern, right? I'll teach you how to find it. You find the pattern. If I teach you how to find it, you can find the pattern. Here's the pattern. Market went up, came down, hit a 618. Went up to the 1.618. Went up, came down, hit a 618. Went up to the 1.618. Went up, came down, hit a 618. It did it over and over and over again. Right here, the market went up, came down, hit a 618. Now, my black line at the top of my screen is indicating the 1.618 or the 618 extension up here. Does everybody see this? This is where the market's supposed to go. Does everybody also see that off of this move, the market went up, came back down, hit a 618 retracement? Remember, off of the 618, it's supposed to go up to the 618. Can we all see that the market is moving to the exact same 618 extension here? Fantastic. Now, Eileen says, I have a doctorate in pharmacy, but I've never traded, and I can see that pattern. For everybody with me in the presentation, it is no coincidence that these 618 extensions are in play right now. Both of these 618 extensions are right next to each other. That is also not a coincidence. Professional traders are the ones that move the market. For all of you with me in the presentation, the professional traders that entered into the trade at this 618 retracement, if you got in right here, can we all agree you're waiting for the market to go to the 618 extension? Everybody agree with that? Can we all agree that if you're going to get yourself in the trade right here, you are also expecting the trade to go to the 618 extension? This is the kind of trade that you're looking for. Now, guys, these are daily candlesticks. So let me show you what happened. The very next day you started making money. The very next day the market took a little bit back. But can you guys see how over the next 2 days the market is saying, hey, good job. Your 618 is holding. Your support and resistance is working phenomenally well. Now, guys, back here when I had to take the trade, I had to set a stop loss. Do you guys want to see how a professional trader sets their stop loss? It's so much easier. When I show this to retail traders, I always have to tell them, guys, turn your brain off, just use your eyes. Turn your brain off, just use your eyes. Can we all see that if the market were to fall below the 618, and I haven't mentioned this a lot, but can we all see the support and resistance here? Market went up and on a daily candle, hit and bounced, right? That's a 100 pip bounce. Then for 2 weeks, support and resistance. Can we all see this level of support and resistance here? Support and resistance, uptrend, trend line. I have not hit my trend line yet. Does everybody see this? The only thing that's missing from a perfect trade setup is my trend line bounce. Now, this happens all the time. Can we all agree that oftentimes the market will show you a trading opportunity but will not make it a perfect trading opportunity, and you got to make some decisions? Here is how professional traders make their decisions. They say, okay, 618 retracement, my stop loss would have to be right here. However, off of us, and do we all understand the reason my stop loss is here? In order for my stop loss, or the reason for my stop loss to be here, is because the market would break through my 618, that's the pattern that I'm trying to follow. It would break through my support and resistance, and that's the pattern. It would break through my trend line, through my 5-0, through everything. If it did that, I wouldn't want to be in here. My risk in the trade, black line represents my reward. Now, for everybody with me in the presentation, let's make this simple. Top left-hand corner, you can see from this line to this line, there's about 108 pips. Does everybody see this in the top left-hand corner? You're looking at 108 pips worth of risk. Now, you can manipulate what you want your risk to be. If you are okay with $1,000 worth of risk in this trade setup, you would have about $1,000 worth of risk. If you're not okay with $1,000 worth of risk and you only want $100 worth of risk, in this trade setup, you'd have $100 worth of risk. It's up to you. On $1,000 worth of risk, you are looking at about $5,000 worth of reward. 5-to-1 risk to reward. Now, if you could accomplish that, how many of you in this presentation would be thrilled by that? Absolutely. Now, for everybody with me in the presentation, let me explain something to you. This is what professional traders do. They simply say, okay, my risk versus my reward. They understand that if they don't want $1,000 worth of risk or $1 million worth of risk or $10 million in most of their instances, they don't have to take that much risk. For everybody with me in the presentation, look at what the market does. The very next day, can we agree this is building your confidence? Can we agree that this should even be building your confidence? Even though the market took back some of the profit that you made the day before, can we all agree that you're seeing your technical analysis over and over and over again hold up just fine? Can we all agree that all of this is building your confidence? In addition to this, can we also see how I can tighten my stop loss up every single candlestick? Because each and every time the market doesn't have to go as much against me to show me a trend line break. So what's happening is my risk is getting smaller, right? I'm down to about 80 pips worth of risk. However, I've still got 500 pips worth of reward. For everybody with me in the presentation, when the market does this, now this is where a lot of retail traders kill themselves. How many of you have black and white rules? When I say black and white rules, how many of you would look at this and go, oh, it broke through the 618 retracement, I'm out of this trade. Or it broke through my support and resistance level, I'm out of here. How many of you currently do that? Or fine, if you're looking at an engulfing bearish candlestick and saying, oh, engulfing bearish candlestick, I'm out of here. For all of you with me in the presentation, can we agree, and for all of you, can we agree the only reason that you're doing this is because you're doing everything possible to cut your losses short and let your profits run? Can we all agree to that? It's the only reason that you're doing that. You're looking for anything that might be a clue of when you should cut your losses short and let your profits run. For everybody with me in the presentation, guess what? You would not, now let's just use some common sense logic. You wouldn't get into a trade just simply based on the fact that you had a bearish engulfing candlestick. You would not get into a trade just because you've got a trend line break or because you've got a 618 fib break. For everybody here, all right, for everybody here, and Omar types this in, I hold trades too long. Professional traders combat this. Professional traders combat this. And Greg types in, there are always exceptions to every rule. That's not true. That is not true. Greg, I'll make a deal with you. Tape your mouth shut. You will die 100% of the time. There is no exception to that rule. For all of you with me in this presentation, I want you to understand. Is recognize my stop loss. And you know what? In the very next candle, can we see how once again the market pushed back down, but our buyers are once again fighting in? For everybody with me in the presentation, what happens is this very next candle, I am still tightening my stop loss. Now, for all of you that would have let this or even this rush you out of the trade, stop and think about this. How often do you get yourself out of the trade to only find out that that ended up being a morning star formation and the market shoots off in your direction and does exactly what you thought it was going to do? You got yourself out too early because you were doing what you thought you should have done. You were cutting your losses short and letting your profits run like you were supposed to. How many of you in this presentation are right now thinking, this guy is watching me trade? For everybody, and I can see all the LOLs and the yeses coming through. For everybody with me, right, I want you to understand something. This is what professional traders do, all right? This is how they take trades. This is how, they're not emotionally void, right? They are not emotionally void. They look and say, okay, this is what I'm looking for. Now, somebody typed this in. They said, great historical trade story. For everybody with me in the presentation, this is the current market. Now, anybody with me that's thinking, okay, what he did is cherry-picked a chart, guys, these patterns happen all the time. Once again, do we all see a 618 retracement on your screen that took place on Thursday? This is Friday market movement. Do we all clearly see the market went up, came down, 618 retracement? Can we all clearly see my new 1.618 extension? Okay. For everybody with me, let me zoom out of this bad boy. And I'm going to zoom out of ways. You tell me, is this 130 level a pretty relevant level of support and resistance right here? You know, when the market went up, hit it and fell, went up, hit it here and fell, hit it here, hit it here. For everybody with me, and the question's being asked, does this occur in all pairs? Yes, this happens, guys. For all of you in here, you guys have been trading long enough for the most part, and I'm giving this room a lot of credit, but you guys in here have been trading long enough for the most part to know, we know that professional traders communicate with each other, right? I mean, ladies and gentlemen, let's just think about this. Professional traders are the ones that move the market. We just identified that. We also know that because they're professionals, they talk to a whole bunch of other professional traders. Do you think it's possible that one professional trader might speak to another professional trader and tell them that they might be in the market to trade something? You think that might happen? For everybody with me in the presentation, do you think they get insight from other traders? Hey, what do you think of so-and-so? Because I might be looking at it. For everybody with me, I want you to understand something. The triggers that they use to execute trades are technical and fundamental patterns. Now, for everybody with me, can we all agree that what I've got on your screen looks like it might have some potential? Very good. So, guys, what I've got here should really start to make a lot more sense to you. And here's a good one. Corbin types this in. Corbin says, what you've got makes a lot of sense unless you happen to start trading when the trend is over. And that's a true story. For everybody with me in the presentation, I want to show you guys something. Do we all realize that what retail traders do is they find out that the market's in an up pattern, or they find the 618 pattern, they just find it way late. And when they find it way late, they jump in with all the other dumb money, and that's an industry word. I'm not calling you guys dumb, but the other stupid money, their dumb money follows in, right? The smart money was in right away. For everybody with me in the presentation, retail traders sabotage themselves by not, right? By not, Jetta types in, oh my God, I like you, LOL. Guys, I'm just being honest. For everybody with me in this presentation, the smart money takes advantage of the dumb money oftentimes, right? And BH realizes this. For everybody with me, and bingo, this is exactly where I'm going in Anant, great eye. Anant says, the last rise, this, you guys notice that this 618 retracement that had the same 618 extension as this one was never hit? Do you guys see that? Everybody see this? This one was never hit. Ladies and gentlemen, this is how professional traders predict. So on this trade, have you guys ever heard of professional traders taking tiers of profit? Tiers, profit tiers. So guys, what professional retail traders say, okay, I'm in here, and then they close 100% of their trade out when they get here. Professional traders don't do that. What professional traders will do is they'll say, okay, and see if you guys can keep up with me. Off of this 618 retracement and this 618 retracement, as a pro trader, I know this is where the market is going. I got in off of this 618 retracement, you know, this one right here. I know that the extension is all the way up here, but I also know that right around here the market's going to slow down again, because this is when all the traders that got in here and here are going to hit their profit and get out of the trade. Does this make sense to everybody? This is why levels of support and resistance will also coincide with Fibonacci retracement. For everybody here, when the market hits this number, this will be my tier 1 profit for this trade. My tier 1 profit for this trade was along my support and resistance level right here. I took tier 1 profit in this trade. My tier 1 profit in this trade was along support and resistance right here. My tier 2 profit is up here. Simple story. Can we all agree if there was a way for you to be able to consistently make somewhere between $200 and $1,000 a day? We would all like that. We'd all like to see how that's possible. Everybody agree to that story? How it works is professional traders take tiers of profit. Now, what I'm going to show you is this system. This system does exactly what you and I just did together. It just does it for you automatically. Now, guys, the way that it works is simple. My Japanese candlesticks are above the light blue line, right? Above the light blue line, I'm in the buy zone. When my Japanese candlestick goes below the light blue line, I'm in the sell zone. Now, for everybody here, understand the important part. That light blue line is my trend line. Above the light blue line, I'm in the buy zone because I'm on top of the trend line. I'm in an uptrend. It's an automated trend line, guys. For everybody with me, when I'm below the light blue line, I'm in the sell zone. Ladies and gentlemen, the green line represents the very same technical indicators that I just used. They're just bundled with custom settings to them. When the Japanese candlestick is above the light blue line, like it is here with a green indicator, that buy indicator, like it is here, you buy. Stay in the trade until the green line ends. When the green line ends, you close out the trade. You sell. right? For everybody here, when the market goes below the light blue line, it works the exact same. Now, what this system is doing is exactly what you and I just did together. The difference lies in the fact that, guys, because you're using the system, it will be a little late to get you in. It will be a little late to get you out. It will not be as good as you can be as a good educated trader by yourself. However, if I could show you a way to generate conservatively $2,000 to $10,000 on a monthly basis consistently, am I in line with what you'd like to accomplish? Very good. And guys, I'm not trying to, over promote this thing. This thing is not perfect, right? It is not. However, for anybody in here that knows what a yield curve looks like, this is the track record. This is an annual yield curve for this system in one currency pair. Now, you can apply it to any currency pair. This is one currency pair over 12 months, a roughly $2,000 investment, generated $48,160 of pure profit. Now, for everybody with me in the presentation, what the system does is exactly what you and I were doing together. All right, take a look right here. This is where the market went below the light blue line. Below the light blue line, I enter the sell zone, and I have a red sell indicator. Now, this is the best part. This is where the system will automatically get you into the trade. This is where the system will automatically get you out of the trade. Now, BH types in, I'm tired of working for other people who will never pay me what I'm worth and don't appreciate me. BH, I know what you mean. That is the reason that I became a trader. For everybody with me in this presentation, what I want you to understand, this is your way to be able to get yourself involved in the trading process. And ladies and gentlemen, immediately, automatically, while you're forced to make somebody else money, for just a couple of more months, you're generating $720, automatically getting you in, automatically getting you out. Now, here's a really good example. Can you guys all see what I mean when I say the system gets you in a little late? You really wish you would have started selling up here, right? And you really wish you would have gotten out down here. Does everybody see that? Right? What the system does is it grabs the fat part. Again, take a look right here. This is where the market went above the light blue line. Now, I already had my green indicator, so this is where the system got me in. Kept me in the trade up to this point. Now, at this point, it automatically closed me out of the trade. I made $2,610. Now, for everybody with me in the presentation, part of the reason the system is as consistent as it is because what it's doing is exactly what you and I did together. Market Traders Institute wants to show you the extent that they go. Now, for everybody here, Market Traders Institute provides to you an entire team of analysts. Just like a professional trader, you have a team of analysts that are always 19 hours a day, each and every day the market's open. They are there trying to find for you the very best trades. This is what MTI's analyst alerts look like. Now, for everybody with me in the presentation, this is FX Jazz, one of MTI's analysts, said, hey, sell the New Zealand dollar, US dollar. This is where we're getting in. This is where we're taking our profit. This is where we're setting our stop loss. Now, for everybody with me in the presentation, this is what Market Traders Institute does for you. They take all of the guesswork out of it. Now, to give you guys kind of an idea of why having somebody like this and a team of people like this is such a powerful tool, let me introduce you to this guy. This is Josh Martinez. Now, Mr. Martinez is known in this industry as FX Pathfinder. He is a head Forex analyst at Market Traders Institute. Now, this is FX Pathfinder's trading account statement. For everybody with me in the presentation who's looking at this saying, well, you know, what about proof? What about trading results? Ladies and gentlemen, this is My FX Book. My FX Book is a third-party auditor. What they do is they look at trading results, right? And BH is any relation to Jared? That is Jared's son. For everybody with me, what they do is they look at trading results. Does everybody see that he made, just from the period, 4,548%? Now, guys, to give you an idea, his personal trading is ranked 7th against tens of thousands of other traders. Now, for everybody with me, I'm going to tell you something. He and everything that I'm about to show you are all part of the Ultimate Traders package. Guys, you get access to an individual like FX Pathfinder who's not only throughout the day calling trades for you, but guys, for all of you that get involved today, Pathfinder for the next 30 days is going to work with you specifically. He is going to send you his personal trades, all the ones that he's taking himself, the ones that gave him those results. For everybody with me in the presentation, another thing that you're going to love is this. Believe it or not, you're going to love when you're wrong. Let me explain why you're going to love when you're wrong. Just like the system that I introduced you to, just like the strategies that we were using here to set those really tight stop losses and those aggressive limits, for everybody here, the system does the exact same thing. Here, you lost $100. Now, can we agree, if you make $722,610, you're okay with losing 100? Can we all agree to that? I would agree with that as well. Now, for everybody with me in the presentation, what Market Traders Institute is going to do today, again, for all of you that get involved today, for 120 days, for 3 full months, Market Traders Institute is going to cover your losses up to $500. They're going to tell you, hey, look, when something like this happens, we're confident enough in our education, we're going to give you the money back. Oh, wow, I apologize, guys. It's 4 months. It's 120 days. 4 full months they do it. 4 full months they do it. So what that means is you lose this $100, you're still confident. You know, it's not that big of a deal, and you're around for $3,720 worth of profit. Now, for everybody with me in the presentation, what I want to do, I want to show you 1 or 2 just simple things. Can we all agree everything you've seen so far is more than enough to help you start making money as a trader? I told you guys before I was going to show you a trade at about $14,000, right? $14,000. For everybody with me, how many of you pay attention to the news? Fundamental release? Anybody here paying attention to the news? Very good. So all of you that are with me that pay attention to not been what the market has done, and you don't know why. For all of my fundamental analysts, especially last week, you saw the news, said this is what the market should do, and the market did something opposite, and you're trying to figure out why. Anybody in here trying to figure out what the heck's going on? So ladies and gentlemen, this is why you need Market Traders Institute. I can sum it up in one word. The word is China. For everybody with me in the presentation, all of the news releases that we got last week were all lagging news releases. Okay? All of the news releases were lagging news releases. What we are not, as retail traders, taking into account is that the professional world traded that trade last month. They are trading next month's trade now. Does this make sense to everybody with me in the presentation? Part of the reason that many of you guys are smart traders, part of the reason that many of you are expecting what you're expecting is because of interest rates and potential interest rate changes here in the United States. Do we all agree with that statement? You guys are smart traders. I'm giving you the benefit of the doubt, and a lot of you are typing in your yeses. Ladies and gentlemen, there is a trap coming. Do not fall in the trap. Can we all agree that we are in a global economy? Yes or no? Now, I am not one of those eternal pessimists, contrarian naysayers. Ladies and gentlemen, I believe that the reversal that we're seeing is a very real reversal. I think the global economy 2 years from now will be dramatically stronger than it is right now. But ladies and gentlemen, I also believe that along the way, we're going to hit a couple of bumps. I also believe that along the way, Chinese housing numbers still have some information to be able to show. I also believe along the way, yes, professional traders will start taking trades now, but I don't think the Fed makes changes in September. Long story short, for everybody with me in the presentation, be very careful what you trade. What I have on your screen is what I believe to be the safest trading opportunity available in the currency market right now. Guys, it's $14,000 worth of potential profit. This is a weekly time frame. Weekly time frame. And Corbin says QE trap. Nope. QE, believe it or not, will finally save the day. Now, let me show you guys something here. Can we all agree in general concept, this market has been doing what it's supposed to, meaning it's been predictable. It went to a 618 retracement, a 1.618 extension. 618 retracement, 618 extension, 618 retracement. Has it been doing what it's supposed to do? Very good. For everybody with me in the presentation typing in a yes, you're absolutely right. That's what I mean when I say the market has been doing what it's supposed to do. Can we agree that for a while, and I'll back this up here, for a while the market was doing what it was supposed to do? It had been following that trend line perfectly. If I was a trader, that was the easy money. Can we all agree that right here, especially the way that I trade, when I saw this Japanese candlestick, I'm thinking, man, this is exactly what I'm looking for. I am in. Ladies and gentlemen, I was in. I got in. I was in right here. I said, you know what? I can set my stop loss like right here, and thank God I did. If the candlestick closes below my trend line closes, I'm out of here. My extension off of a 5-0 Fibonacci, or excuse me, a 5-0 Fibonacci retracement, way up. Long story short, guys, I get stopped out. For everybody with me in the presentation, this candlestick is a big part of the reason you want to make sure and have a stop loss. Now, can we all agree that it's at this point in time that the market is no longer doing what it should have done? Can we all agree? Bingo. Ladies and gentlemen, as a trader, are we all going to be stuck in positions at some point in time where the market's going to do something that it wasn't supposed to do? Yeah, right? Can we all agree that when that happens, oftentimes there is a negative monetary reaction? You lose money when that happens. And damn it, when I lose money, I need a way to get it back. Can we all agree to that as well? Professional traders have a way to get it back. When the market breaks one rule, it will comfort you to know that there are other rules that the market will then start following that will give you the ability to make your money back. And one of them is that the market repeatedly, after it breaks the inner trend line, will come back up and bounce off of the outer trend line. When the market came up and touched the outer trend line, all it took for me was to recognize that I was hitting a 786 Fibonacci retracement off of a level of support and resistance in a downtrend. I'm done here. My stop loss, guys, is the exact same as what it would have been. I just basically look and say, okay, if I'm on the opposite side, I am out of here. For everybody with me in the presentation, off of a 786 retracement is a 27 extension. For everybody with me in the presentation, there's your very next candle. For all of you here, this is what Market Traders Institute wants to bring to the table. Now, many of you guys got an opportunity to hear about Market Traders Institute. And yes, and I am shorting Omar. And you got an opportunity to hear from Market Traders Institute clients. Now, I'm going to show you this, guys, and you're going to get an opportunity to hear from them. And I'm not showing you stuff that they posted 6 months ago. This is stuff that they posted only yesterday. For all of you with me, Market Traders Institute tonight, this afternoon, today, wherever you are around the world, wants to give you an opportunity to take action. And guys, this market is very different than some of the things that you guys have already tried. For many of you with me in this presentation, you can take a very small amount of money in $200 increments. In only a week, you can turn it into $3,000. For everybody here, by doing business with MTI, you do business with an industry-recognized leader. Not only are they 100% guaranteed in that they give you a 100% money-back guarantee, but on top of that, today they're going to give you $500 to be able to cover your losses for the next 4 months. It is state-of-the-art, and everything that I've shown you is part of the education. You get access to everything that I've shown you and a ton more. In fact, guys, all 5 phases of the education are online. So you don't have to necessarily physically travel anywhere. You're not waiting for books. All of the theory is available to you 24 hours a day. The practical application portion, the same folks that are your analysts that work with you for a full 19 hours a day, these are the same folks that serve as your instructors. So each and every week throughout the course of the week, they're actually teaching you classes. They're teaching you the lessons. But the best thing is let's say you got a crazy schedule, right? You're not sure you can attend. For everybody with me in the presentation, they record all of the presentations, but for 19 hours a day, and MTI is the only educator that does this, they give you the advantage of the pros. 19 hours a day, you have a team of analysts, full-time analysts. You get to come into a live room, and actually, you get video here and audio. You can type in any of the questions that you have. They do the analysis with you, or you can come to them and say, hey, look, I'm looking at, Sean was looking at the dollar CAD. Is this a good trade? You can type that in there, and they'll do the analysis with you right then and there. Now, in addition to this, MTI gives you 3 different systems. I showed you the FX Turbo Trader today. The reason I only showed you the FX Turbo Trader is simple, guys. This is my bread and butter. This is the one I've been using for a really long time. I love it. They also give you the FX Pulse and the FX Cable. Now, the Turbo Trader does really well in a trending market. The Pulse and the Cable do very well in sideways or consolidating markets. These are the 3 strategies to be able to trade in any market type. In addition, another big reason that MTI's systems succeed where everybody else fails is because they are constantly updating their systems. So guys, last week, when you get non-farm payrolls in a week, when you get unemployment, or excuse me, not non-farm payrolls, but housing numbers in a week, when you get all of these things, some of these fundamental releases, the Fed numbers last week, or Fed meeting minutes last week, Bernanke speaking on Thursday afternoon, these things could have shaken up the market. If they do, Market Traders Institute's analysts are always on standby. They're ready to tweak the systems, update the systems to make sure they stay as accurate as possible. All of the systems automatically get you in and automatically get you out. So if you're not in front of your computer, you have the ability to execute trades automatically getting in and out. It's, again, guys, seamless. In addition, you get mentorship with individuals like Jared Martinez, the FX chief, right? I told you in the beginning, I'm not that smart of a guy. This guy is a genius, right? You get to talk with people like me. Guys, I will be able to help you as a trader. I will be able to explain this to you. In addition, all of you get unlimited lifetime attendance opportunity to either a 2-day in-person live class that you can physically come to MTI's headquarters and meet with them, or you can attend it live, but from the comfort of your own home or your own office. Don't have to leave where you are. Market Traders Institute actually puts associates in the classroom for you, so when you ask a question, you'll have somebody that will actually ask your question live in the class. You'll be watching, listening, and the instructor will answer your questions live. Guys, you can attend these classes as many times as you'd like forever. Market Traders Institute's education is yours for a lifetime. Market Traders Institute's support is yours for a lifetime. The question, how much can you make? Well, guys, this is a look at MTI's team of analysts, the Analyst on Demand Room. Analysts are here to answer your questions, but they're also aggressively finding you trade setups. Now, when they find a good trade setup, they tell you exactly what to do. It's time to sell the dollar Canadian dollar at this price, with this stop, with this limit. Anywhere you are with internet connection, these trades come to you. Gentlemen, at $10 a pip, that is $38,230 of profit. For all of you on a monthly basis, that's $12,000. Now, if you want to look at this and say, yeah, but, and I know some of you do, that's fine. Guys, even if you were only able to do a fraction of that, could you have used an extra $4,000 a month from trades that were brought to you? What would you have done with that money? What about this? We're talking about $4,000 a month. What about the instance that the systems automatically get you in, automatically get you out? Over 2 years, they have generated an average of 436 pips per month. $4,000 a month. What about what Market Traders Institute has the ability to do in just one web presentation a week? Guys, every Tuesday night, Market Traders Institute, they get individuals like myself, the FX chief. They get individuals like FX Pathfinder on to this Tuesday night presentation. What they do in this Tuesday night presentation, what we do in this Tuesday night presentation, is we introduce you to things like the double drop prediction. Now, for everybody with me, what I showed you with regard to that yen cross, that is, that dollar yen, that is the double drop prediction. It's happening in a couple of different currency pairs. Guys, in just what MTI brings you. This is what they bring you. You don't have to be a good trader. You don't have to know how to trade currencies. Over $23,000 in potential profit a month. It's a no-brainer for all of you with me in the presentation. Just keeping it simple. If you're with me and you want to get yourself involved with an organization that understands, look, we want you to be the best because we provide lifetime support, lifetime education, access to the charts, access to individual trading opportunities with over $40,000 worth of potential profit, a 100% money-back guarantee. Guys, if you're ready to get yourself involved, you have the ability to take advantage of everything that I've shown you today for a one-time price of $6,995. Now, for all of you with me in this presentation, if you're ready to get yourself involved, now is the time. Type your phone number into the question section right now. Now, If you have questions, I want you to know I'm absolutely going to answer all of your questions and give you an opportunity to see what MTI clients are doing. But very quickly here, another thing that I want you to see. And I want to say thank you. I can see a lot of you already typing your phone numbers in. For all of you that are already typing your phone numbers in, guys, today Market Traders Institute wants to say thank you. It is a Saturday afternoon. We understand that for most of you here, this is your prime time. So guys, we're going to say thank you by giving you the ability to do something very special. Today, you're going to take advantage of the best. You are going to get the best at a discount. Now, this does not happen often. For all of you, if you're serious about getting yourself involved, do what so many others have already done. Type your phone number into the question section right now. I want to start saying my thank yous to each and every one of you that have already typed in your phone numbers. Thank you, TJ, Paul, Tyler, Ahmad. I'm going to say Valith because I can't pronounce the whole name, but Valith, I've got your phone number. Thank you. Wen, I've got your number. Thank you. Christo, I've got your phone number. Thank you. Bill, I can see you typed in your phone number as well. Bill, thank you. Troy, I've got you. Thank you, Troy. Jillian. Is it Jillian? No, it's Lillian. Lillian, I've got your phone number also. Dustin, I've got you. Thank you, Dustin. Ruth, I've got your phone number also. Thank you, Ruth. Larry, I've got your number as well. Thank you, Larry. Omar, I can see your phone number. Now, guys, please don't leave, but I do want to say my thank yous. Harleen, I've got your phone number as well. Thank you. I want to say thank you to Jim and Thomas. And I can see a number of other numbers coming through. While I read these numbers out, guys, another advantage, guys. For all of you that get involved today, you're going to get a chance to take advantage and receive Josh's personal alerts. Now, for everybody with me in the presentation, this isn't something that MTI normally does. What Market Traders Institute is going to do is they're going to give you access to the exact same trades that Josh takes. I mean, exact same trades. So what he's going to do is when he takes a trade, it goes right out to you. And when it comes out to you guys, you have the ability to immediately take action, and you can actually communicate with him and ask any of the questions that you have right then and there live. It is a super opportunity, and you're going to start communicating with him as well. He's going to communicate with you personally. It really is a cool opportunity. Questions being asked about payment options, we absolutely do. Also, remember this, guys, today MTI is going to cover up to $500 worth of losses. Another big advantage, I want to say thank you to Cindy, Omar, Dan, Jim, I've got your phone number. Guys, here's a testimonial on your screen while I continue to say thank you to all of you typing in your phone numbers. Mark, I can see your phone number. Thank you, Mark. Jamila, I've got your phone number as well. Thank you, Jamila. And again, guys, take a look right here. Hello, I'd like to take a moment and let you and the rest of your staff know how happy I am that I luckily opened your email back in October. It was an invitation to a webinar for MTI to promote the UTP. After the webinar, I couldn't join up fast enough. I spent almost 3 months learning the UTP. Things are going very well, much better than I expected. Just today, I captured over 500 pips. Since going live in my account, I've made just over $18,000 in the last 7 weeks. I believe the sky is the limit. For everybody here, you know, I devote my Saturdays. I'll give up a Saturday to do this to help people like Jamila, to help people like William, who also typed in the number. Thank you, William. I've got your phone number to help Dex and Dave. Because, ladies and gentlemen, I know that you don't have to be a genius to be able to do this. You do not. If I can do it, you can do it. Alex, I have your phone number. Evlita, I've got your phone number. I appreciate it. Now, for all of you with me in the presentation, let me show you something here quick before you start typing in your options. Today, there are 2 different ways that you can do this. Now, one of the ways that you can do so is option A. Now, guys, you get a ton with option A today. Option A saves you $1,500. It gets you access to FX Pathfinder's trade alerts and to his email to communicate with him. It gets you $500 for 120 days to cover losses, and you get all of it with a 60-day 100% money-back guarantee that says, look, if for any reason you don't like it, you have the ability to return it and get a full refund. For all of you with me that are thinking option A is the way to go, what I'd like you to do, if you're interested in option A, type in option A right now. For the rest of you, option B is an option as well. Now, option B is not as good of an option. However, option B makes this something that all of you can do. For all of you with me in the presentation, option B is the ability to put down a down payment. You make payments on the education. The downsides, the negative to option B, no discount. In addition, no $500 to cover losses. In addition, no trade alerts with Josh. However, for everybody with me in the presentation, you don't need any of this stuff to make money with Market Traders Institute. It helps. Option B is a great option if it's your only option. Because, ladies and gentlemen, even with option B, MTI gives you 100% guaranteed approval. No one is charged any interest, even though they're going to, again, basically finance it for you. In addition, you still get the 100% money back guarantee. So it really is an opportunity for all of you to be able to try it if you're interested. For all of you with me in the presentation that have already typed in a phone number, let me know, are you interested in option A or option B? For the rest of you, if you have not yet typed in a phone number yet, now let me know. Give me your phone number and let me know, are you interested in option A or are you more interested in option B? And I can see a bunch of you already typing in the options that you're interested in. There you are, Wen. I've got you. I want to say my thank yous. Omar, I've got you down as an option A. Omar, let me know, are you still interested in option A? I think you typed that in right away. But Omar, I've got you down as an option A. You see where I wrote your name down, my friend? There you are, Omar. I've got you down as an option A. Thank you. Dustin, I've got you down as an option A. William, interested in A. Thank you. Villathuba, I've got you down as a B. Thank you. Wen, I've got you down as an A. Thank you. Christo, I've got you down as a B. Thank you. Jamila, I've got you down as a B as well. Thank you. Guys, for all of you, if you have to type in B, there's nothing wrong with that. Guys, who cares what your financial situation is right now? Get yourself involved. Give them an opportunity to help you, because for each and every one of you with me in the presentation, option A or option B is irrelevant. Get yourself involved and start making a change. I want to say thank you to Dex. Dex, you're not the only one. Dex says, I'm interested in option A, but I've got more questions. Dex, we're going to answer them for you. Sandeep, I've got you down as an option B. Thank you, Sandeep. Sandeep, do me a favor. Type your phone number into the question section. I don't believe I have your phone number yet. Sandeep, please let me know your phone number. I'm going to put you down as an option B. Thank you. I appreciate it. Dave, I've got you down as an option A. Dave, do me a favor. Type your phone number. Oh, no, I apologize. I've got you. Thank you, Dave. I've got you down as an option A. Thank you. I believe Undrib, type your phone number in there. I don't believe I have your phone number yet either. Jean, type your phone number in there as well. Jean, I see also interested in option A. Jean, type your number in there. I appreciate it. Jean, you beat me to it. Good job. Let's see here. Lillian, I've got you down as an option A as well. Thank you, Lillian. Let's see other questions, other comments. Where did I go? There we are. Umar, I've got you down as an A. Larry, thank you. I've got you down as a B. Larry, I appreciate it. Also want to say my thank yous to Gene. I can see you typed in your number. Adam, I can see you typed in your number. Dave, I've got your number. Thank you. Also, Peter, I've got your number. Thank you. Lee, I've got your number. Thank you. Sandeep says, I lost my mobile phone. Man, I would go nuts if I lost my phone. For everybody with me in the presentation, guys, understand something. In client web alerts alone, over $5,920. What I'm talking about is if you could only attend one web presentation per week, make one series of trades per week, it's worth $5,900. Guys, today is a no-brainer. What I want to do right now is if you have questions, I want you to go ahead and type them in. Now, guys, I have 258 people still with me in this presentation. I want you to know, if you're here right now and you have not yet typed your phone number in there, get your number in there right now. Let me know, are you interested in option A or option B? For all of you with me in this presentation, if you have a couple questions, you think you might be interested, but you need some answers, that's fine. They're not going to bite you. Type the number in there. Give them the ability to get back in touch with you, because, ladies and gentlemen, it's not just the recent future. Does everybody see the testimonials on my screen? This is 6 hours ago, right? We're not going a million years back in time. This is what's going on right now. Katarina, these are all current. Now, watch this. I'm going to go ahead, and I'm just going to scroll. Somebody type in the word stop. Anybody, type in the word stop. There it is. For everybody with me in the presentation, so we stopped. Now, I've been scrolling indefinitely there, right? We are now at June 25th. I'm randomly going to stop. This is an uncensored look at what over 4,000 MTI clients are right here saying. For everybody with me, I made 90 pips last night on MVP's 12 to 12. Now, whenever you hear them talk about FX MVP, FX Techno, FX Jazz, FX Pathfinder, FX Chief, these are MTI's teams of analysts who work with you. Jim says, made 90 pips last night, $900. Tony, I had a few rough times when I started, but thanks to the UTP, the MTI staff, AOD, and the Chiefs' inspiring words and encouragement, I found my strategy, made back my losses from before, and it's currently up 3,400 pips. Now, ladies and gentlemen, that's $34,000 at $10 per pip. For everybody with me in the presentation, tell me when you want me to stop. All right, there it is. For everybody with me, Greg locked in 125 pips here, made 120 pips for Katarina. Nelson made 202 pips. We're in June. For everybody with me, Milan, my balance for this week, total wins, 1,000 pips. Total losers, 700 pips, walked away with, and guys, in dollars and cents, on just a $2,000 investment, $3,683.30 for 1 week, trading in $2,000 increments. You guys don't know this. Billy is a high school student. Billy says, hey guys, I'm very impressed with MVP and you guys on the double helix today, Thursday, as I just closed out 4 lots. Now guys, this is $40 a pip from a high school student. He didn't come to us like that. Totaling 900 pips of profit. You guys rock. You are awesome in what you do. Ladies and gentlemen, whether it's me showing you clients who are like, look, I made 648 pips in a day, or me just scrolling through, I can go indefinitely. Ladies and gentlemen, this is what it means to be a client of Market Traders Institute. Now, you owe it to yourself, if you're with me in this presentation, to take action. If you're with me right now, look, maybe you don't have all the money. I understand. You're not the first person to tell Market Traders Institute, I love what you do, but I can't afford to pay for everything up front. That's the reason that Market Traders Institute has become what they have. Ladies and gentlemen, they are here to help you. Please, for all of you, you want to let me know that I've devoted a good Saturday afternoon? Take action, even if it's just to answer questions. For everybody with me in the presentation, for all of you that have typed your phone number in here, I want to say thank you to each and every one of you. If you have not, now is the time. Take action and do so. For all of you, stay by your phone. The folks from Next Step Financial Holdings are about to give you a call right now. They're going to answer each and every one of your questions. Ladies and gentlemen, I am going to leave this window open for the next 2 minutes. 2 minutes, that's it. If you are serious about wanting to succeed, type those numbers in right now and let the folks at Next Step Financial Holdings help you. Guys, answer your phone today. They're working on a Saturday for you. Pick up and talk to them. I want to say thank you to each and every one of you on behalf of all of us, from all of us to all of you. Enjoy the remainder of your weekend. Thank you for the opportunity. Thank you guys for being so phenomenal. Thank you for all of your great wishes. And as always, happy trading and goodbye.